Good afternoon, everybody, and thank you very much for joining us today. This is our fourth and final season on the Consumer Protection Code webinar series. They were all presented by members of our Compliance Institute Consumer Protection Working Group. So today's webinar is in relation to customers in vulnerable circumstances and financial abuse. As always, the webinar will run for approximately 1 hour. We encourage you to ask questions, so please submit the questions throughout the webinar because we will have time during and at the end to answer any of the questions that are coming through. CPD code is 2025-2124, and this will be sent to everybody once the session concludes, along with a copy of the slides, and the session will be recorded and uploaded to the library section of compliance.ie later on today. So I'll now hand you over to our speakers. With us, we have Martin Moran, Compliance Business Partner in Howden Ireland, and Anne-Marie O'Connor, Programme Manager in Safeguarding Ireland. Thank you both.
Okay, thanks very much to the Compliance Institute for inviting me to speak today. So I'm going to talk about Safeguarding Ireland, adult safeguarding, and why it's important, it's relevant to you. I'll touch on the relationship between human rights, the Assisted Decision-Making Capacity Act, the European Accessibility Act, and the link between adults at risk of harm and consumers in vulnerable circumstances as described in the code. I'll also touch on financial abuse and round up by providing an overview on the main ways of reporting harm, signposting customers to advocacy and advice organisations, and say a little bit about data sharing. So first, a little bit about Safeguarding Ireland. Safeguarding Ireland has its origins in the aftermath of the investigation into adult abuse issues in the Irish Attractive facility, and was designed to bring together views on how adult safeguarding could be addressed primarily in health and social care services. However, very early on, that focus broadened to include financial services. Safeguarding Ireland is a very small organisation which provides no service to the public. Nonetheless, every single day, we receive serious concerns from the public, professionals and individuals. Overwhelmingly, those concerns relate to financial abuse of adults at risk. So the provisions relating to financial abuse in the revised code are particularly welcome. So what is adult safeguarding and why is it relevant to you? Put simply, safeguarding means putting measures in place to uphold our rights, support our health and well-being, reduce risk of harm, and empower us to protect ourselves. You will note that the code specifically refers to the term customers in vulnerable circumstances and no longer talks about vulnerable consumers or customers. In Safeguarding Ireland, we refer to adults at risk of harm and have a particular focus on people who, for whatever reason, are not positioned to protect themselves from harm. There is no statutory definition of an adult at risk, but the Law Reform Commission in its 2024 report on a regulatory framework for adult safeguarding proposed the following definition. A person who is not a child and by reason of their physical or mental condition or other particular personal characteristics or family or life circumstance, whether permanent or otherwise, needs support to protect themselves from harm at a particular time. There is therefore significant overlap between the customer in vulnerable circumstance as envisaged in the revised CPC and adults at risk of harm. Adult safeguarding is relevant to you, as you will note in the guidance on protecting consumers in vulnerable circumstances at 2.3.8. There's a table which sets out what should be covered by staff training. Bullet 11 refers to adult safeguarding. If we think about vulnerability as a spectrum, then adults who, for whatever reason, are less able to protect themselves from harm may face more acute risks. Adult safeguarding involves all of us, you regulated financial services providers, us in civil society, your representative bodies and the public sector, working together to prevent, reduce and respond to adult abuse, neglect or coercive control. So, like yourselves, Safeguarding Ireland have been quite engaged with the process of review of the CPC. We made a very detailed submission to the discussion paper and a second shorter submission to CP 158. We've also made submissions to the CBI's consultations on innovation engagement and also on the individual accountability framework. And prior to that, going back a number of years, to the review of retail banking, the National Payment Strategy more recently, and the National Financial Literacy Strategy. In every one of those submissions, we highlighted the needs of adults at risk of harm and the need for better products and safer services. In addition, Safeguarding Ireland participated on the writing group for the Decision Support Services Code of Practice for Financial Services Providers, which many of you will also be familiar with. It's fair to say that Safeguarding Ireland has been very proactive on issues relating to consumer financial vulnerability, with an emphasis on supporting and empowering consumers, focusing in particular on risks relating to financial abuse. It is also fair to say that while there is much more remaining to be done, there has been some quite important progress over the last 2 years in particular in the legislative and policy environment as it relates to consumers in vulnerable circumstances. So a key concern we have in Safeguarding Ireland that will be shared by many other civil society organisations is the risk of some adults being denied access to financial services on the basis of a condition. This is particularly the case for adults with an intellectual disability and for adults whose capacity may be a question. Access to financial services is a human right. Article 12.5 of the UN Convention on the Rights of Persons with Disability provides that state parties shall take all appropriate and effective measures to ensure that the equal right of persons with disabilities to own or inherit property, to control their own financial affairs, and to have equal access to bank loans, mortgages, and other forms of financial credit, and shall ensure that persons with disabilities are not arbitrarily deprived of their property. So the Assisted Decision-Making Capacity Acts, which you will be familiar with, are really important in furthering some of those objectives. In Ireland, the Assisted Decision-Making Capacity Act provides for a number of arrangements that you may be familiar with and roles that can be of use at different times. They include a decision-making assistant who helps to obtain and explain information to communicate decisions. The person still makes the decision. A co-decision maker, who is a person appointed by the relevant person to make specified decisions jointly. The arrangement must be formally registered with the Decision Support Service. And a decision-making representative may be appointed following an application to court. Decision-making representation orders are limited in time and scope. The Act also introduced new procedures for making an enduring power of attorney, as well as providing for oversight by the Decision Support Service, which is very important. Planning ahead for who will be an attorney and what decisions they can make is really important for all of us and can be a key mitigant against vulnerability and financial abuse at any point in time. Under the Act, as I've mentioned, there's a number of codes of practice, including the one for financial services providers, and there are 9 guiding principles that financial services must apply. Presume every person has the capacity to make decisions about their lives. Support people as much as possible to make their own decisions. Don't assume a person lacks capacity just because of an unwise decision. Only take action where it is really necessary. Any action should be the least restrictive on a person's rights and freedoms. Give effect to the person's wishes, values, and beliefs. Consider the views of other people. Think about how urgent the action is and use information appropriately. So, notwithstanding the Act, the principles, and the arrangements, having access and control over individual financial affairs is still proving problematic for many adults, and in particular, adults with intellectual disabilities. So we're hopeful that the European Accessibility Act will make a real difference for consumers. As you know, the main requirements are that services must be accessible, clear and accessible information must be provided in multiple formats. Where firms use products to provide a service, those products must be designed so that people with disabilities can use them easily. Firms that provide support services must make sure consumers can contact them in accessible ways, offer information about how accessible their services are, explain how their services work with assistive technology, and so on. While a primary aim is to promote social equity and increase access and inclusion, the EEA will strengthen the provisions that I've described under the UN CRPD. In addition, the EEA will bring economic opportunities, both for individuals and for firms. It will also bring more consumers into the market. It also provides much needed opportunities for innovation, particularly in relation to product and service design. And as we know, inclusive design benefits us all. So moving on then to the CPC and its provisions in relation to customers and consumers in vulnerable circumstances. I am sure all of you will already be familiar with the requirements. consumers in vulnerable circumstances require additional support when engaging with financial services. Firms need to understand vulnerability. The requirements are quite holistic for firms. They cut across culture, strategy, business model, decision-making, systems, controls, policies, processes, and procedures. Consumers in vulnerable circumstances require both additional protection and support when engaging with financial services. Firms are not expected to be able to identify all consumers in vulnerable circumstances, and I think that's quite a significant difference to the approach that has been adopted in the UK under the Consumer Duty. Nor are they expected to categorise or label their consumers as being vulnerable. What they are expected to do is to understand and take account of the drivers of vulnerability. The emphasis on circumstances is new in the code. It is welcome, as the term vulnerable consumer was viewed by many as very stigmatising. The literature also highlights that focusing on circumstances rather than types of people is an important distinction. It shifts the focus from vulnerability as something inherent to certain groups of people to vulnerability being as a result of a specific life event or set of circumstances, which can happen to anyone at any time. These events or circumstances are known as drivers of vulnerability and often give rise to restrictions on access to financial services or control over money or financial decision-making, which can in turn lead to harm and detriment. While firms, I presume, are very focused on preparing for March 2026, it may be very useful to also think about some of the known drivers of vulnerability and their trajectory over time. Aging, the population in Ireland and globally is aging, but it's a particular challenge for Irish society. The number of people aged 65 and over is projected to double to 1.6 million by 2051. The data show that older people are enjoying a good quality of life and participating in the community. However, increased longevity is one of those macro trends that regulated firms really need to consider from the perspective of vulnerability. It gives rise to increased prevalence of age-related disability, the need for incomes and pensions to last longer, and the greater probability of experiencing a life event that could give rise to vulnerable circumstances. We also know that the number of people who have a disability or disabling condition is increasing. In terms of resilience, CPC data show that when faced with a financial shock, a loss of income, or the ability to handle a large or unexpected expense, certain groups would be unable to manage for a month or more, including in particular younger households and those with lower levels of education and lone parents. Thinking specifically about resilience in young people, there is their current financial resilience and also their future financial resilience to consider. Their capacity to access and benefit from the financial products and services that older generations have enjoyed and the resultant vulnerabilities for them. UK data show that the number of financially vulnerable consumers is increasing there. In particular, they highlight the situation of the category known as unsteady starters or younger renters with flexible or volatile incomes who are not yet established financially and regularly rely on loans. While not all consumers are in vulnerable circumstances, vulnerability is very much a mainstream issue. CPC addresses digitalisation separately, and I won't go into it here other than to highlight the impact of digitalisation on certain categories of vulnerable consumers. Research by Consumers International shows that consumers in vulnerable circumstances experience digital finance in different ways. For example, 52% of higher vulnerability consumers report falling victims to scams, compared to 19% of lower vulnerability consumers, and 61% of higher vulnerability consumers have difficulty seeking redress in digital finance, compared to 38% of lower vulnerability consumers. Against that background, Safeguarding Ireland, along with many other civil society organisations, would be strong proponents of the potential of fintech to enhance the lives of consumers in vulnerable circumstances and the need for innovation in this regard, so that to the greatest degree possible, all consumers can reap the benefits of digitalisation. This is not just about increasing levels of digital financial literacy, it's also about innovation in product and service design. Moving on then to financial abuse. The definition of financial abuse in the code has two elements. The first addresses the wrongful or unauthorized taking, withholding, appropriation, or use of consumers' money, assets, or property. This describes a fraud or scam. The people who commit such frauds and scams are typically strangers to the victim. And it's this second part that we particularly welcomed in Safeguarding Ireland. The second part addresses any act or omission by a person, including through the use of a power of attorney, guardianship, or any other authority regarding a consumer to obtain control through deception, intimidation, or undue influence over the consumer's money, assets, or property, or wrongfully interfere with or deny the consumer's ownership, use, benefit, or possession of the consumer's money, assets, or property. And this is a really important distinction. The people who commit this type of financial abuse are typically known to the victim. We are really pleased to see the definition of financial abuse in the final code. It is the first time financial abuse, not just frauds and scams, has been formally recognised in Irish public administration outside health and social care. But we are really only catching up on the rest of the world. In the UK, economic abuse is included as a category of abuse in the Domestic Abuse Act 2021, and already cases are going before their financial services ombudsman. In the United States, regulated firms are required to indicate in suspicious transaction reports relating to elder financial exploitation whether the suspected abuser is a person known to the victim or a stranger. Polling carried out by Safeguarding Ireland in November 24 showed almost a third of adults in Ireland have experienced financial abuse, with the vast majority, over 80% of the abuse, carried out by someone well known to the victim rather than online or anonymously. Unlike other frauds and scams, financial abuse is likely to be vastly underreported and could go undetected because the perpetrators are typically individuals who are trusted and known to the victim. Firms are very much the first line of defence in identifying this type of abuse, particularly where the victim may not recognise that they are being financially abused. Lack of data on financial abuse has been a real hindrance in encouraging the development of an appropriate response, and almost all jurisdictions point to the invisibility of financial abuse perpetrated by people known to the victim. Financial abuse has been described as a hidden harm, being rampant but invisible, and a silent crisis. Without data, there is an uphill battle in proving to policymakers that this is a real issue that needs to be addressed in a holistic way with some urgency. One of the key ways that we can all address financial abuse is through reporting, signposting, and sharing information appropriately. All of us have reporting obligations as they relate to certain offences and certain groups. So I would highlight the Criminal Justice Withholding of Information on Offences Against Children and Vulnerable Persons Act 2012, and the one that you are most likely to be very familiar with already, the Criminal Justice Act of 2011. I would also highlight that staff of financial institutions can share a concern about an adult at risk with the HSE's adult safeguarding and protection teams. And I've highlighted the details there in relation to their portal and how it can be accessed. In terms of decision supporters and decision support arrangements, any person, including but not limited to a relevant person, appointer, donor, or directive maker, can make a complaint about an appointed decision supporter or a decision support arrangement, and the DSS will examine the complaints and carry out its own investigations, and will also refer certain offences to An Garda Síochána. The Department of Social Protection also will act on any reports it receives of alleged abuse of its pension or benefit recipients and has a dedicated adult safeguarding unit. There are also some really important organisations that can be of huge support to the person and can provide them with independent support and advocacy. So I'd highlight in particular Sage Advocacy, which is an organisation that supports older persons, and the National Advocacy Service for People with Disabilities. And of course, the Money Advice and Budgeting Service is a support to anybody who needs assistance, not just with debt, but also with money advice and budgeting, and who may need support to manage their money autonomously. I've just given a link there to other organisations where reports can be made. But our view in Safeguarding Ireland, when it comes to adults who are at risk of harm and abuse and who are unable to protect themselves from that harm, if you have a concern about abuse, neglect, or coercion, respond, report it. Finally, in terms of information sharing, Safeguarding Ireland and other organisations have had some concern about over-caution with regard to sharing of information about the abuse of adults at risk. And at the end of July, the Data Protection Commission launched an adult safeguarding toolkit, which clarifies the legal basis for data sharing and the factors to be considered and the procedures to be followed when sharing data. In conclusion, CPC is today's focus, and I've mentioned a range of related terms and legislation, all of which need to be considered both from the firm's perspective and from the consumer's perspective. It is notable how many organisations from civil society and working with consumers in vulnerable circumstances made robust submissions to the code. Age Friendly Ireland, Age Action Ireland, Social Justice Ireland, Inclusion Ireland, the INOU, MABS, FLAC and others. And many state bodies also made detailed submissions to the CBI as part of the review process, including the Mental Health Commission, the HSE, the Data Protection Commission and the CCPC. This may be reflective of the CBI's open and engaged approach, but it also reflects the importance of this code to consumers. There are certainly heightened expectations now, as well as greater awareness. I know from the firms that we engage with in Safeguarding Ireland, the firms do want to get this right, but it is not without its complexity. I would encourage firms to keep the consumer very much to the fore, to involve and learn from consumers who are in vulnerable circumstances, to engage them in product, policy and process design, and to collaborate with each other and with civil society organisations as far as possible. Thank you.
Thank you, Anne-Marie. So I'm just going to switch over there. So Anne-Marie, while I'm switching over to Martin there, I have a question in. So just bear with me there. So in relation to, so how can firms navigate situations where safeguarding concerns arise, but the customer insists on financial independence and privacy?
Okay, I think it's a really interesting question, and I think, well, obviously there are the reporting obligations that I have mentioned, and I think they are obligations that we all have where we see certain harms and certain abuses. But it is important, I think, to support the customer as well, and there may be, you know, some amount of work required to demonstrate to the customer that the consumer that this is financial abuse. And you know, there is most definitely in Irish society a kind of legacy of tolerance around certain forms of financial abuse, particularly where it occurs within families. So I think that there's an amount of work that organisations like the firm can do and their staff can do. There are roles also for organisations like Safeguarding Ireland in raising awareness about financial abuse, in calling it out. I mentioned the HSE's adult safeguarding and protection teams, who are also really important resource for people where somebody may need support to understand what's happening to them and to understand what direction they wish to take. The two advocacy organisations that I've mentioned, Sage Advocacy and NAS, are really practiced at this, and they've both published on issues relating to financial independence and financial abuse. So certainly for me, I would always be signposting to those two organisations.
Thank you, Anne-Marie. So Martin, I'll hand over to yourself now. Thank you.
Thanks very much, Fiona. So what I'm going to look at now is the consumer in vulnerable circumstances from a company's perspective. Look at where we came from and where we need to go to now, and some points to consider along the way. Sorry. So just to set out the context of what has changed in the vulnerable customer space is in 2012, the version of CPC, the rules, the definition and the guidance set out meant that, you know, we needed to provide additional assistance where we define the customer to be vulnerable. It set out the categories of vulnerable customer as capable of making their own decisions, but their particular life choices or circumstances should be taken into account when assessing suitability. That they're capable of making their own decisions, but require some reasonable accommodation in doing so, or they had limited capacity to make their own decisions, whether that be on a temporary or permanent basis. The guidance also went in to define that the identification of a consumer's vulnerability or otherwise required the exercise of judgment and common sense based on the consumer's ability to make a particular decision at a particular point in time. So stealing the opening line from the guidance on protecting customers in vulnerable circumstances goes with the changes, outlines the changes within the new framework, clearly covering what firms need to do for customers in vulnerable circumstances. Firms need to understand vulnerability and to ensure that their culture, policies, processes take into account the needs of the consumers in vulnerable circumstances. In reality, the main aim of customer in vulnerable circumstances is the same as vulnerable customers in 2012. Ensuring that the customer gets the right outcome. The difference now is how firms get there. What's needed in order to meet the requirements and the method, while overall the methods of additional assistance mightn't change, but what needs to happen is changes in the background. So what I'm going to cover over the next 20 minutes are the rules and guidance that are coming in March of next year and the considerations for firms when considering your new vulnerable customer or customers in vulnerable circumstances, policies, procedures, and associated training. So the new definition of vulnerable customer in vulnerable circumstances on the screen. It means a customer that's a natural person whose personal circumstances, whether permanent or temporary, make that customer especially susceptible to harm, particularly where the regulated entity is not acting with appropriate levels of care. In the guidance, when talking about the definition, the CBI have stated that there is a principle that consumers should take reasonable responsibility for their choices and decisions. However, we need to know that there are real factors that may limit their ability to do so. The circumstances and characteristics of vulnerability do result in consumers needing additional assistance or help to make the correct decision for them or for them to truly represent themselves. As has been talked about earlier, vulnerability can take many forms. It can be permanent, temporary, or can alter based on events in a person's life, such as job losses, bereavement. The question in the guidance is firms must ask themselves what types of harm their customers may be vulnerable to and how this impacts their customers' experience and outcomes. Harm can be understood to mean less favourable outcomes that may arise where the firm fails to act with appropriate levels of care towards the consumer in vulnerable circumstances. The aim from the process and procedures, therefore, must be to ensure that when a customer is in vulnerable circumstances, that the assistance provided ensures that the customer still receives the products or services that are suitable for their needs, that they're designed and deliver through effective communication, and that the approach to vulnerability also needs to reflect the nature and complexity of the products or services that are being provided to the consumer. So providing assistance, following on from the definition, the rule on the screen states that there must be ongoing reasonable assistance to ensure that the customer receives the right outcome when dealing with the firm. So what form does reasonable assistance take? Is that offering the consumer the ability to bring a third party to a meeting? Is it providing the customer with more time to digest information? Directing the customer to other firms or charity bodies that have been talked about already, or translators, or whatever we feel that it needs to be. Additionally, in the guidance, the CBI called out that the approach does not require individual customers to be considered vulnerable for firms to provide support in line with the broader requirements of CPC, including the requirements to secure the customer's interests. For example, if the customer states that they don't understand something or they need assistance, the firm should take appropriate steps to ensure that the customer's understanding, regardless of whether we actually view the customer to be in vulnerable circumstances. Providing assistance can be viewed differently from firm to firm, or even from department to department in larger firms. And consideration should be given to working out what sorts of vulnerability will impact on the firm's or department's customers, and adjusting policies and procedures to suit these customers. Additionally, complaints processes should be tailored for customers in vulnerable circumstances to ensure that these customers are not deterred from complaining. Along with considering what reasonable assistance will suit your set of customers, considering the level of tailoring that's needed to your policies and processes is also a key consideration. So alongside having processes and procedures to deal with customers in vulnerable circumstances, we need to look at the process and product design to see if the design of these products and processes are done in a way that they impact predictable vulnerability, so adversely affecting customers. With digital platforms, complicated phone systems, or online-only channels, there should be consideration for potential differences in consumers' understanding and their capability to deal with such platforms or services. Digital can make certain customers, especially those in vulnerable circumstances, feel uneasy, especially where they feel they're not technically minded or internet savvy. Products and processes designed can also seek to positively protect customers in vulnerable circumstances by using technology to assist customers that may need additional assistance by, say, automatically asking them online if they need assistance, or allowing customers to block gambling payments or sites, or use systems to monitor other issues such as money mules. Proper product and process design should also involve testing and review to ensure the processes and products meet the customer's needs and that there are appropriate supports in place. Bringing vulnerability into the product or process, if not already there, is a key consideration for your product governance. And where does it fit into the process? Additionally, for credit institutions, another consideration needs to be if they're looking at closing branches, and the suitability of other services in the area must be considered for the vulnerable customers in the affected area of the closure. While there's not a specific requirement to have fields in systems, the requirement to record information received from customers in vulnerable circumstances would make you ask if all systems should have an area or screen to record details. And the way the code sets out that staff should record relevant information on vulnerability in an appropriate way that's accessible to all other staff who may need it for the context of the ongoing relationship with the customer would lead you to look at IT solutions. The data should be maintained appropriate and in accordance with the law, so data protection is key. Any data recorded on customers' vulnerability should be completed in a way that's sympathetic to the customer's view on their vulnerability, should they ever request a copy of their data. Additionally, if you're recording data in relation to special category data, such as health, then explicit consent is required for the customer if you don't already have it, and how and where this explicit consent is going to be recorded needs to be considered. However, as another consideration, the guidance states that there may be circumstances where customers are not willing or able to provide information about their circumstances, and where it's not possible or practical to obtain consent in order to retain the information. In certain scenarios, it may be appropriate to record relevant information where it is clear that it will assist the firm in securing the customer's best interests. So where you do not have consent, the wording is going to be key to ensure that staff can assist the customer. Assisting staff to consider the wording they use when recording the information is going to be key to the next point, which is training. So while most firms would have provided training on vulnerable customers on an annual basis, it's now a requirement to ensure that impacted staff receive appropriate training in relation to vulnerable circumstances, to ensure that they have the knowledge and awareness to understand, recognise consumers in vulnerable circumstances and how they can respond to their needs of those consumers. Knowledge and awareness of policies and procedures and controls for responding to the needs of the customer in vulnerable circumstances is also key. So what's on the screen is a list provided by the guidance as to what should be included in the training. It's not an exhaustive list, and you are looking at, making sure that the training includes key signs and indicators of vulnerability, that it enables and empowers customers to disclose a need, and that we recognise and are responding to exploitation and abuse. So you should be using the data and your experience and knowledge of vulnerabilities that your firm is dealing with in order to tailor the training to best suit the needs of the staff and the customers that you deal with. So who to train is a key consideration. We must look at the staff's ability to impact vulnerable customers, and that's not just customer-facing staff. It's also staff involved in the design and development of financial products or services. It's staff involved in the marketing of the financial services or the sale. It's staff involved in oversight and responsibility for all the staff in those areas. And any other staff or area that may cause harm or may cause to deal with customers in vulnerable circumstances at any time. The last one means that you need to consider everyone potentially could impact a customer in vulnerable circumstances. Then at least every 2 years, you must review whether the goal of the training is being achieved and prepare a report of the findings of such review for a board of directors or the entity or persons controlling the regulated entity. So using your data on vulnerabilities to tailor your training and using this data then to ensure that training is doing what you're expecting, to ensure that it's working and you're interpreting the data correctly to deal with your vulnerable customers in vulnerable circumstances. Excuse me. So, what is a trusted contact person? Well, as it says on the screen, a trusted contact person is a contact information for a contact person, where it can be used in circumstances where you've concerns about the customer is in financial abuse, or that you need to confirm certain information, such as the customer's current contact information, their health details, or the identity of a appointed legal guardian, trustee, executor, or if you experience difficulties dealing with the customer. Staff of the firm should be able to identify the opportunity for customers to nominate a trusted contact person. When dealing with customers, staff can advise where they believe that it's appropriate that the customer can nominate a trusted contact person. Where there's a decision to contact the trusted contact person, you can disclose confidential information about the personal consumer to the trusted contact person for the purposes of discussing the relevant matter, which are on the screen. Remember that where a decision is made to contact a trusted party, the trusted contact, there must be written consent. A trusted contact person has no legal authority to deal with the affairs of the consumer and is not a legal representative. The guidance is clear that where a customer may also have other arrangements in place to assist them in their dealings with us. For example, a customer may have in place assisted decision-making arrangements under the Act. Where other statutory arrangements are in place, firms should defer to these other arrangements instead of dealing with the trusted contact person. Key consideration here is where a where data is going to be held, how the firm will ensure that the contact person is only used in the right circumstances and that there's consents in place, or how to ensure that where other parties are authorised, that we're dealing with the correct person and that there isn't any confusion. Financial abuse, including frauds and scams, do remain a concern, particularly for customers in vulnerable circumstances. Firms can't prevent all forms of fraud or scams or abuse from occurring. However, firms, especially in the front line of fraudulent or abusive transactions, or addressing the consequences of the action to ensure that the fraud doesn't take place. When there are concerns with the customer, frontline staff should have the ability to bring their concerns to the attention of someone within the firm who is sufficiently expert and senior and authorised to take actions where there can be, the firm can seek to limit or prevent detriment or harm from happening to the consumer. So firms should have a dedicated person in place to whom concerns can be raised in a confidential manner, and an appropriate policy and procedure for setting out how the staff can raise concerns. Firms should be providing training to this contact person. So the key consideration is, who is the contact person in the firm? Is it someone in compliance? Is it money laundering? Is it AML? And what do they do with the concern if they believe it to be valid? So other relevant regulations. We need to be clear where a customer is in vulnerable circumstances. It fits into a framework of regulations that exist to help other customers. In this sphere, we're mainly talking about the European Accessibility Act and the Assisted Decision Making Act. So that where firms are concerned about the customer's decision making capacity, the provisions of the Assisted Decision Making Act must be complied with. Firms must consider the supporting code practice used by the decision support services, including practices from the financial services providers. Some useful links are provided on the screen. And on the European Accessibility Act, accessibility doesn't necessarily mean vulnerability, but it should go hand in hand alongside it to ensure that the vulnerable process is adhered to and that all customers can access services. The guidance is also clear that the code doesn't directly apply to MiFID firms or crowdfunding services, but the guidance does say that firms should learn from the guidance in protecting customers in vulnerable circumstances and should consider the customer's best interest when dealing with these customers. However, the CBI doesn't expect crowdfunding service providers or MiFID firms to comply with the trusted contact person or the training requirements. So I hope this has been useful from a firm's perspective, and while vulnerability itself has not changed, the supporting cast of documents required to support it, the training and reviewing of this training, trusted contacts and product governance have all been enhanced and will work with together, and the possibility of IT developments to capture all of the requirements to be ready for March of next year. I'll hand it back to Fiona.
Thank you very much, Martin. So now we have time for Q&A. So as always, please ensure to submit your questions in there and we'll address them. So I actually have one. So Martin, we'll give you a bit of a break. We have one straight in for Anne-Marie. So just bear with me there. So in relation to, it's going back to the safeguarding toolkits that you mentioned during the presentation. So how do firms balance the obligation to protect vulnerable customers with obligations under GDPR and the Data Protection Commission's audit safeguarding toolkit when sharing information?
Yeah, I think the Data Protection Commission's toolkit, it's a document that's really geared, in my view, towards DPOs. It's quite a technical document, and it is very much dependent on the purposes for which you're sharing the information and the rationale. And it is really clear that the Data Protection Commission expects that there is a risk assessment, there's an analysis, that the basis for sharing data has been identified in advance of sharing that data. However, I would say, and the example is given in the DPC's document around sharing data under the withholding of information related to offences against Children and Vulnerable Adults Act. And it is clear from what the DPC say that that is a requirement, that we have a reporting obligation in relation to that piece of legislation. I would also think in relation to our reporting obligations in relation to fraud, that is pretty clear. And now, I don't work in a financial institution, but certainly when I'm responding to people, I always set out what the obligations are in relation to those offences. So I think it becomes more complex where what's happening is less clear. And that's where really you do need to be weighing up the decisions and doing the risk assessment. And I do think that a lot of investment is required now within firms to see, when are we going to share data with whom, beyond the very clear cases of fraud that may have presented in the past. The ones that relate to financial abuse are going to be really complex, because these are going to be relate to people within the customer's household, their family. They could be other customers of the financial institution that are, allegedly causing the harm and abuse. So I can't navigate that for firms. I think it's really complex, and I would advise people to have a very close reading of the Data Protection Commission's toolkit, because they go through a variety of different scenarios and set out what the various legal bases are, and it is certainly very much context specific.
Thank you very much. So Martin, we've one in there in relation to the trusted contact person. So is it acceptable to record someone as vulnerable in consideration of GDPR, or is permission of the customer required?
It depends. It really depends on what you're recording. I mean, if you're recording special category data, then the express consent of the consumer is required in order to record that. But if you're just recording notes in relation to your dealings with the customer, and that you provided additional assistance, or how you dealt with the customer, then you don't require consent in relation to recording that data. It's just when you drift into special categories of data like health that you would need it.
Thank you. Then another one here. So does removing the reference to personal consumer mean these requirements now also apply to sole traders and partnerships?
No, it's a natural person is the way it's written.
There's a distinction made between customer and consumer in the guidance.
Perfect. Okay. So there's a good few coming in there now, so bear with me. So I've one here for yourself, Anne-Marie, so just bear with me. So for Anne-Marie, if a DMR does not listen to concerns of relatives, is there any course of action to see how individuals previously expressed wishes, not written down specifically, can be heard by the court? It's a long one, sorry now, Anne-Marie, it's just to take the screen, apologies. Can be heard by the court. There appears to be limited ground for complaints on DMR.
Sorry, now my direct experience is obviously I don't support people who are in arrangements, but the DSSS have a complaints procedure that I've linked in some of my notes. In relation to DMR, I'm not quite clear what the question was. It was past will and preferences. Was that the person's past will and preference not being reflected in the DMR?
Not being recorded.
In the DMR, or just in general, that they weren't known?
Well, maybe if they want to come back in and clarify that, we can move on to the next question, and then we'll come back
Sorry,
if they can clarify it. Yeah, no problem at all. You're fine.
To experiences at court, what I do know is that some of the courts are very specific about that requirement to hear the voice of the person, and where a person is not able to communicate, that's where some of the advocacy organisations have proven to be really important. So again, Sage Advocacy could provide, in certain cases, an independent advocate to establish, you know, what is the voice of the person, and maybe get a better understanding of what their past will and preferences were.
Thank you. And if they come back, I'll obviously address that further. Over to yourself, Martin. We have a question for you there. What controls should compliance teams implement to ensure that channels such as online platforms do not disadvantage vulnerable customers?
You're looking at ensuring that they're as simple as possible to use, and that there's nothing that excludes vulnerability, or sorry, customers in vulnerable circumstances from using them. Customers in vulnerable circumstances can get stressed by overcomplicated processes, procedures, and ensuring that your product governance is set in a way to design products as simply as possible, and also using your data on the vulnerable customers you deal with to make sure that you are building in ways of ensuring that those customers can deal with your online systems is a way to ensuring that you don't impact on the vulnerabilities that that you deal with.
Thank you. Let's go over there in a second. Go through these. So Anne-Marie, what are the timeframes and escalation protocols for reporting financial abuse to external authorities under the new CPC guidance?
Under the which guidance?
The CPC guidance.
I'm not aware that there's any. I'm sorry now. I'm not aware of any specific timelines myself. Sorry, apologies if I have missed that. Martin, are you aware of any specific guidelines on reporting?
The guidance talks about having internal processes in place for staff to escalate their concerns. Yeah. It doesn't have any guidance as to reporting those externally or any timeframes around it. So it's having a person in place where any concerns can be reported to, and ensuring that the person who's taking those reports is sufficiently trained to deal with them, and then escalated elsewhere if needed.
Now, I am sure that the implication and the practice would be that they do have to be reported on a timely basis. That the risk of not reporting concerns or is too great, and I'm sure in addition to that, and I think it is mentioned by the CBI, those various blocks and breaks that can be applied to a customer's account, they're really important too. And I don't know what the protocol within firms is on applying them, but I am sure that there is a requirement not to let time lapse and not to let activity continue where there is a well-founded risk of financial abuse or fraud on a customer's account.
Thank you. So next question there. So with the new rules, how can firms realistically support vulnerable customers during remote transactions like large online or ATM withdrawals without retrospective accusations of not doing enough? So that's for yourself, Martin.
I don't know how you deal with the ATM withdrawals from a vulnerable customer or customer vulnerable circumstances perspective. It's your interaction with the customer that would lead you to ascertain whether a customer is in vulnerable circumstances or not, and then use that information to make decisions as to what you need to do with the customer. So I don't know of a way that you'd be able to do that with normal ATM transactions, but there is a you can use monitoring to ensure money mules and stuff like that. So you could use technology around that too and see if there's anything unusual about the customer's transactions.
Thank you.
And sorry, just in relation to that, that's the kind of case, obviously, where the trusted contact person would come into the fore, you know, where there was unusual transactions via an ATM, you know, where you don't have the opportunity to interface face to face with the customer as you would where the customer came into the branch, but where there's unusual activity, I think via an ATM, it would be a really good use case for the trusted contact person.
Thank you, Anne-Marie. So sticking with yourself, actually, Anne-Marie, so what constitutes a reportable concern to the audit, safeguard and protection team versus a matter that should remain within the firm's internal risk management process?
That's a really interesting question. Okay, I can't establish that for firms. I can only speak about, you know, the type of concerns that I would signpost. You know, where I have an indication that this is an adult who is at risk of harm, there is an allegation that harm has occurred, and that adult is unable to protect themselves from harm. So that's the other criteria with safeguarding. So in many instances where there's a harm to a customer in vulnerable circumstances, they may be able to protect themselves from that harm. So if you're talking about, for example, you know, and we've had some very urgent cases, you know, both financial and non-financial. One case, for example, relating to an older person who was in a situation where it was extreme self-neglect and a risk to the person. And that was, you know, absolutely no doubt in my mind around the need to escalate. So I think I'm not sure how firms judge that. And maybe it's a little bit around looking at the risks that are there anyway in the firm's customer base. But certainly, you know, where I am of the view, and I'm sure firms are very practiced at this, that there is an immediate risk of harm to a person, I will always be signposting to the adult safeguarding and protection team. And they then have the skill as trained social workers and qualified personnel who deal with safeguarding all the time to assess the risk themselves. So I don't think firms should really be second guessing where there's a risk of harm or an allegation of harm to an adult who is unable to protect themselves from that harm.
Thank you very much, Anne-Marie. So they're flying in. So I think we'll do one more each and then we'll close out, if that's all right. So this is for yourself, Barton. Should firms create a dedicated vulnerability policy or embed it into existing customer care frameworks?
In reality, based on the way the code is written, you would need a dedicated vulnerability policy to ensure that, you know, you are dealing with the individual consumers in vulnerable circumstances correctly, and that you've set out the vulnerabilities that you deal with and how to escalate if required, and all of that is required in an individual policy. And I don't really think it could be built into others, but you know, firms could look at maybe integrating it into other policies. But I think the way the guidance is written and the way the code is written itself, I think you're better off having individual policies.
Thank you. So one last one then, we'll close out yourself, Anne-Marie. What legal protections exist for financial firms that report suspected financial abuse, particularly under the Criminal Justice Act obligations?
Yeah. Now, this issue was looked at by the Law Reform Commission in its report on a regulatory framework for adult safeguarding. And they did propose, make proposals around safe harbours in the case of reporting financial abuse in those situations. Now, it was a little bit ambiguous around what protections are already there. I believe that the protections do exist in terms of the obligations to report, but institutions may have different views on that. I haven't gone into detail on that, but my view is always that there is an obligation to report.
Thank you,
and Garda Síochána are very clear about it in you know how they describe all of our obligations, regardless of where you're working or how you encounter fraud. It's very clear and unambiguous around the reporting requirements.
Absolutely. So look, that's the time for all the questions there now, and thank you everybody for submitting so much. It's really appreciated, and thank you for joining. So just as I wrap up, I just want to thank our Consumer Protection Working Group for presenting to our members over the last 4 sessions. They were very enjoyable, very interesting, and they are all available in the library section if anybody wants to recap on any sessions that we've had. So thank you very much, everybody, for joining each session. And a special thanks to Martin and Anne-Marie for the presentation today and for answering the volume of questions that came through. So thank you so much. So thank you, everyone, and have a great rest of your day. And I'll send the slides and the code on to everybody shortly.
Thank you.
Thank you.